This is the performance summary for week 10 of 2025, which is the week ending March 7th. Let's start by inputting the starting and ending balances. Starting balance was on Friday, Feb 28th. And the ending balance was on March 7th. Balance there was 28,361. So last week was a pretty terrible week for the strategy. I lost close to $1,900, which is a loss of 6.14%. The market overall was pretty rough last week because of the back and forth on the trade tariffs, and this is causing a lot of uncertainty in the U.S. markets presently. Okay, let's look at the theoretical trades. These are the 5 trades we did last week. And as we can see in the fraction column here, all of the trades were at an exposure of 13% instead of the usual 20%. That's because the system measured the overall market to be entering a downtrend. So when that happens, there's an exposure reduction across the board that happens. Okay, now let's look at these one by one. First one was Goldman Sachs, where we lost 10%. And this is what the graph or the chart looks like. So we have a reversion strategy here. So the stock was selling off in the week prior, and we bought here and sold here for a loss of 10%. The next one is Netflix, where we lost 9.3. Same pattern here, bought here and sold here. The next one is Nvidia, lost about 9%. Exactly the same pattern, bought here, sold here. Next one is Oracle, lost 7. Bought here on the Monday, sold here on the Friday. And the last one is Tesla, where we lost 12.5%. This was the trade right here. And for those wondering why the strategy keeps buying Tesla, despite it being in a intermediate term downtrend, you might want to watch my performance update from last week. There I talk about a safety valve that's built into the strategy where every stock that's traded in the universe of the S&P 100 has an associated safety valve level. And that's basically just a trailing historical price level where if the stock is not above that safety valve number, then it gets excluded from the ranking procedure. This is just to keep us out of stuff that's like really in a prolonged downturn. So now let's input the ending balance into the cumulative tab. So after last week's loss of $1,800, our cumulative gain since going live in June of last year is now $2,300, and it's up 9% since inception. And let's update the graph here. So this is what the equity curve looks like. So yeah, we're in a drawdown right now, max drawdown since going live. And let's look at another. I put together another analysis where I look at streaks by week. So right now we're in a 4-week losing streak, and I just wanted to see how that compares to other losing streaks historically with the system. So this is calculating all the losing streaks going all the way back to 1994. So, and this is using weekly returns. Having a losing streak of 4 weeks does happen once in a while. Like I'd say roughly once a year or once every couple of years. this is where we are right now, at a level of 4 weeks. And the last time that happened was in 2023, and the one before that was in 2022, where there's actually a 5-week losing streak. And it can go up to 6 weeks or even 7 weeks. That was in 2010. 7 losing weeks in a row. So, these losing streaks do happen, and it's just part of the strategy, part of any strategy. And the gray one here is the losing streaks for the S&P 500 over the same time frame, using weekly returns. So yeah, the S&P is not immune from losing streaks either. Now, one question that does come up from subscribers once in a while is, what if we use a stop loss with this strategy? And I just wanted to demonstrate that using a stop loss with the strategy, this particular strategy, is not very good. I do use stop losses in other stuff that I trade, but with reversion systems, it's generally not a benefit. You got to have other risk management measures, which I do, which is in the form of exposure reductions. But just as an example here, this line that I've highlighted is the strategy as is. So it has a long-term rate of return of 21% with a Sharpe ratio of 1.16. Whereas if I put in a 5% stop loss, meaning 5% stop loss for every stock that we have during the week, there the rate of return for the system over the long term drops to 14.6% with a Sharpe ratio of 0.97. And graphically, this is what it looks like. This is the strategy that we're trading, the actual strategy. And here's the one of the same strategy if we introduce a 5% stop loss. So you can see the difference, that clearly there's it's of no benefit to use that stop loss. It actually degrades performance, makes it rougher and lower in magnitude. So this is what we're trading, and drawdowns are part of the strategy. And here's the drawdown graph of the strategy going back to 94, and we can see that right now we're sitting at about a 15% peak to valley drawdown, and that's one of the bigger drawdowns that it can have, but it's not the biggest. It's been in that 15% range multiple times over the simulation going back to 94, and the max drawdown that it has had in the simulation is back in 1998-99, where it was to the tune of 21% or so. So that's the performance summary for week 10 of 2025. If you want to learn more about the strategy, please visit my website at returnstream.com. Link is below. Thank you.